Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Akmir with the Bulletin Board Heroes on Wednesday, the 25th of March, here on Share Talk and sponsored by the UK Investor Show. Starting off with a surprise contender here, Echo Energy, breaking the falling wedge at 0.4 pence during the day today. Could spike up towards initial March resistance 1 to 1.1 pence as a best case scenario target in the near term, especially while we hold above, or at least while we hold above 0.4 pence over the next 24 hours or so. Good bullish divergence there as well, and also filling the last exhaustion gap down as well, which gives the possibility of extra momentum on the upside over and above the return to this month's initial resistance. On to a stock which has had people wishing it better over for an extended period, I think maybe a couple of years now. But it looks like with the coronavirus nightmare, its time may have come. EVR Holdings, with virtual reality, etc., breaking this resistance line from February around 3.6 pence. Bit of a bull flag here. Hopefully will break out relatively soon, before the end of the week. Initial target, the 50-day moving average at 4.35, and then obviously back to the main resistance area between 5.5 and 6 pence. That should be the minimum given the bear trap that we've had from below the September floor, and also the way that we've broken this resistance line quite strongly in recent days. Even more of a surprise, I suppose, is Gene Drive, a stock which I was vaguely aware of and waiting for its time to come. That certainly happened today, and you can see that the share's already back above the main 2019 resistance at 30 pence. While we hold above that, and especially while if we can get an end-of-day close above that today, looking for the top of a broadening triangle from way back in 2017, heading towards 57 towards, well, actually almost up to 60 pence. Only at this stage, only back below 25 pence, which was post-October resistance, really questioning the ongoing push to the upside. But island reversal here and a bear trap as well, so looking pretty strong in terms of the handbrake turn that the price action has given. Following up on Gfinity, which I suppose is in the same camp as EVR Holdings in terms of having its time finally coming on a fundamental basis with esports. Highlighted this around the 0.9 pence area just a few days ago. Can't exactly remember when, maybe even the beginning of the week. But we've also already doubled on that, so looking quite healthy in terms of a likely end-of-day close above the 50-day moving average at 1.61 pence today, and that could lead back towards an attempt at filling the gap there between 2.5 and 3 pence from as recently as January, and hopefully that could be hit by the end of next month. Going on to the dish of the day, I suppose. So many fans of Novocyte, it's hard to count them. Situation today is slightly disappointing, I think, really. Although the shares were up towards the £2 level, as I said, slightly disappointing. Still very much in bull mode while we hold above 150, which was yesterday's, or 145 rather, which was yesterday's intraday low, 145 to 150, the recent support of this week. And looking eventually for 300 pence, but I think that in a way we've got so many people looking for the upside, it'll need a bit more consolidation for the shares. Plus, there's also already a lot of good news in the price for this stock. But the easiest way to go here probably is to wait, if you can, for a break of the 200 pence to target 300 pence, because it looks as though there'll be an extended consolidation between 150 and £2 in the near term. A stock which I've highlighted quite a few times on the way down, alas, so far. The bounce is quite relatively easy to predict. You normally had a day or two upside even from the rebound, so we had that in February and then at the beginning of this month. There should be some more follow-on from the rebound that we've had today, because it's a gap. It's an island gap as well, and a bear trap gap reversal. So one would target, on this occasion, the 50-day moving average at 52 pence, even if the shares once again fall back. Good bullish divergence in the RSI window as well. And at this stage, only really back below 35 pence, which was yesterday's intraday peak, or yesterday's peak rather, would question the idea of the shares going back to the low 50s, even if they fade again. But who knows, on this occasion, with the gaps and the island gap rather, we could do a bit better than previously. New name for the Bulletin Board Heroes is Venture Life. Here we've had a gap, again a bear trap gap reversal, island gap as well. So the gap higher today through 30 pence, and while we hold above today's intraday low around the 29 pence level, we could at least head towards the 200-day moving average and 2020 rather resistance, heading towards 40 pence. But the main plus point here is that it looks as though after an extended bear run for the shares, they may finally be taking off and snapping the negative trend of recent months, and I believe even recent years as well. On to a stock which I suppose has gone up with the gene drive situation. Here we've got your gene, and here it'll be interesting to see whether, in fact, the upside's already been hit at 24 pence. Be interesting to see whether we get any support around the 50-day moving average at 14 pence. That looks as though that would be the place to buy any dip, with a stop loss back below 12 pence, which is the floor of the gap, and then once again going for a retest of 24 pence, the intraday peak of today. On to the final stock of today, and that comes in the form of Zoetic. You can see that shares disappointed. They broke down after fading near the 12 pence level, the lower high versus November. Current situation is that there's a possibility of at least rallying back towards what was former support around 6 pence, maybe up to the 50-day moving average at 7 pence as a dead cat bounce. But really the shares need to break a line of resistance from February towards 8 pence really to get back on a bull tack in a proper way. But one would hope that this is a bear trap rather than the start of a new leg down. Key level to look at here, 4.25 pence. If we can hold above that, then 3.25 pence rather. If we can hold above that, then there is the chance of a return to the top of the range. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.